Good morning. This is Dylan Jovine from Behind the Markets. Happy Friday, TGIF. So I wanted to talk about the Fed's rate cuts on Wednesday, and I didn't talk about them yesterday because, in my experience, it makes sense to wait 24 hours to see how it cycles through the market. And that proved to be the case here. Wednesday, when the rate cut was announced, the market sold off. It was up, and then it sold off. And then Thursday, it was a nice rally, which is great. And a buddy of mine was saying to me, what do you think about the rate cut? How do you feel? And I said to him, I feel great. I feel like we kind of had our cake and we got to eat it too. We actually, my approach, what I've been thinking, I've not been shy about talking about it. This market is incredibly overvalued by a lot of measures, any objective measure an adult would use, a professional investor would use. So we took in our sales, but the good news is we still have a lot of good stocks that have had a great rally. So we've gotten to ride this. We got our cake, we lowered our risk, and we put our money into U.S. Treasury bonds, money market funds that invest in T-bills, basically short-term debt. So we've collected income, and we have positions out there that are up really, really well. I mean, look at Palantir, look at Oscar. I mean, my goodness, Rocket Labs, AGIO, Iovance, these have been terrific performers in the past month. We kind of got really lucky, but I am never going to apologize for warning you when a market's incredibly overvalued. It's kind of like walking through the jungle late at night. You hear roaring in the background, and you've got to be quiet and walk very, very carefully. And the markets are the same way. When the risk goes up, you have got to lower your exposure. And that's what this game is about. So I am happy with the rate cuts. I feel like, again, on the macro side, I think the market is overvalued, obviously. But for example, take Palantir. Palantir is at 37 bucks, 37 bucks. This is a company growing at 20-ish% a year that has a market cap of $81 billion. Remember, in a cheap market, we got to buy Palantir at $7 a share. Recommend Palantir at $7 a share. Now it's at 37. Would you buy Palantir up here? Remember, Oscar, we recommended that at $5, $6 a share. Now it's at 23. These are good examples of how the market is overvalued at an aggregate. But would I complain if Oscar goes from 23 to 30? Absolutely not. I'm going to be very, very happy. Mass delusions could last for a long time. Am I going to complain if D.R. Horton, which we recommended about 30, 40% lower, keeps going up? Absolutely not. That's why it's so important in your investment operations that you keep one eye on the risk and one eye on the opportunity. And I learned this growing up on Wall Street, basically. I remember in the 1990s, Larry Tisch, the CEO of Lowe's, the Tisch family, super smart investors, billionaire investors, super savvy. I remember watching him in the 90s during the dot-com boom. He got bearish on the market. This is like 97, 98. And he went short the market in like 97, 98. And he was short like $1.5 billion of the market. And I watched him lose billions of dollars as the market just kept climbing. So what I learned from that experience is if you are bearish on the market, the number one goal is to preserve your capital. If you are bearish on the market, if you find yourself in a situation where things are just really highly priced, what you do is you take in your sales, you sell your weaker stuff, and you hold on to the rest of it, and you enjoy the ride, as we are doing on those stocks that I mentioned. AGIO is up big. Rocket Lab was up big. It's a big, big winner. So I feel very, very good going into this weekend. I feel very, very good going into the fourth quarter. And I look forward to, again, guiding you with one eye on the reality that this market is, by any measure of value you want to use, historically priced. But on the other eye, on opportunity, making sure that as a steward of our money, that we're not like Larry Tisch was way back when, just defiantly bearish in a bull rising market, losing. And he was right, by the way. Tisch was right. The market was overvalued, but he was wrong on timing. So he was a couple of years too early before that popped, and he couldn't hold the short for that long, lost billions of dollars. So I learned from that lesson, never go short in a rising market. Just take in your sales, hold on to the bets you have, and wait for the right opportunities to come across the plate. So I am happy where I stand. I hope you have a wonderful weekend. God bless you.